feel at this moment, one step closer to independence, to the government shrinking its stake in your company?
Well, I mean, this is a great day for Ally, but it's also a great day for the American taxpayer. So the government put $17.2 billion into the company. As of today, they've got 17.7 back. They own 17% of the company still, which is another $2 billion. So for the American taxpayer, this is a great day, and therefore a great day for us.
With all of the proceeds from the IPO going to the government, where does that leave Ally for its cash standing at this point? And how does the company plan to grow, knowing that all the money is going toward the government, and the government still owns 17%?
Yeah, well, we have $20 billion of cash on hand, liquidity at the moment, so we have plenty of capability to grow. But the story we've been telling investors is less about top-line growth, and it's been more about getting our return on equity, which is at an unacceptably low level. Our priority is to get the returns up first.
How much say will the government have in the company's operations going forward, since, once again, the government will still have a stake, a decent-sized stake, in the firm after the stock sale?
Yeah, there's something called the TARP program, and there's a lady called the Office of the Special Master. And I would say the compensation systems that TARP companies are allowed are the most convoluted, strange beasts that you've ever seen. And when Treasury is no longer a shareholder, we hope to be in a position to put in a normalized comp plan at that point.
Your perspective says that subprime loans have grown to 11% of your portfolio. Are there any concerns about increasing the share of subprime loans becoming a credit risk?
The truth of the matter is subprime loans have always been around 10% of our portfolio. What happened in the financial crisis is the subprime loans went away for the whole industry, as did leases. And what's happened since then is there's been a return to some degree of normalcy. So we look at subprime loans as 10% level as being perfectly normal. And in our business, losses are very, very low. And the losses that do occur, if you say what drives losses, the answer is unemployment is what drives losses. And we feel that the employment environment is at least not deteriorating and getting somewhat better.